Welcome everybody. Welcome, welcome, welcome. Welcome, welcome, welcome. Um, Give me 1 second. Welcome everybody. Welcome again to Alpha Investing. I'm super excited to do this with you guys as always. I'm gonna give it a little bit of time to let everybody try to join in, but we definitely about to get started, get into it. I'm gonna give you guys an amazing presentation like always. So appreciate everyone that is here, and we can go ahead and get into it. There we go. There we go. There we go. Now, first things first, like always, I need you guys to send this. I want you guys to send this to 3 people who need to level up when it comes to the market. Maybe they've been playing around. Maybe they haven't really been taking the information serious. My goal is to serve you guys at the highest level and give this information to you guys in a way that's easy to digest, in a way that's easy for you to learn, in a way that's easy for you to go and apply it when the market opens tomorrow. Well, we got a holiday tomorrow, so the market won't be open until Tuesday. But I want you guys to apply these lessons and everything that I am teaching you immediately. So I want you guys to send this send this out to 3 people who needs to level up in 2025 and increase their wealth and stop playing when it comes to the market. Right? Right? Like before we get started, we got to make sure that everybody who's supposed to come with us comes with us. So I want you guys to truly send this out to a few people who need to level up in the market. They need to start learning about the market. Like maybe they've been teetering around with it, but like this is their sign and their signal to take it serious. Right? So I want you guys to send this out really quickly to 3 people who needs to level up when it comes to the market. We're gonna go ahead and get started in about 2 minutes, 7:05. Now, if you guys have not been here before, this is Alpha Investing. My name is Monte. My goal is to give you guys an edge in the market every single week, give you some information, give you guys a recap of the week, and then give you guys, some information going into the next week, so you guys can always be prepared and understand what is coming, whatever happens in the market. So I don't want you guys to be blindsided. I don't want you guys to just be looking at your account and not understanding anything that's going on. I want you guys to be prepared when it comes to this market. The market, it can be hard. It's a lot of options, right? It's not easy to understand at first, but trust me, after practice and just learning the lingo, it's definitely something that you can master for sure. And I want to be the bridge and help you guys master the market for sure. So I'm gonna give it about another minute, and then we're gonna go ahead and get started. Again, I want you guys to send this out. Send this to 3 people who need to level up in the market for sure. But real quick, let me know in the chat how y'all feeling. Let me know in the chat how you guys are feeling. Let me know how you guys are feeling for the market coming up, the upcoming week. We got a few earnings this week as well coming up. We had some big earnings last week for sure. But let me know in the chat, how are you guys feeling? And then also let me know if you guys can hear me okay. I want to make sure my audio and everything like that is good so we don't have any issues. Good. Cool. Good. Feeling good. Sound is good. Excited as always. Good. 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 You can hear me? Okay. Great. Great. All right, let's go ahead and get to it. So again, for everyone that is new, this is Alpha Investing, retail invested, reinvented. My job and my goal is to give you guys as retail investors an edge in the market. I want to help you guys understand what happened last week in the market every single week. I want to give you guys some investing tips. I want to give you guys some trading tips, and I want to give you guys some information that is truly going to help you stay ahead of the game and stay ahead of the market, so you guys are not being so emotional when it comes to investing. Having a lot of emotion is one of the biggest things that kills returns when it comes to the market. Sometimes we just make a bad decision, right? A lot of that stems from just having emotion that we don't even know where it comes from. So I want to give you guys the information so you can truly be prepared when it comes to the market. Now, y'all know how we do. So this is up or down in the chat. Let me know if this chart is going up or is it going down. Let me know. Let me know. Remember, I can't help you guys unless you guys help me. Let me know if this chart is going up or down. And then let me know if we should be trading it to the long side or should we be going short. Should we be going long, which is mean we're buying calls, we're trading it to the upside, or is it going down? Should we be doing puts up and long? Exactly. Amazing. Again, you guys already know how to trade, right? So whenever you guys are getting into a play, I really want you guys to look at a chart. The chart is going to help you. The chart is a visual representation of all the fundamentals in the company. So profit margin, whether they be earnings, whether all the news came out, right? They got new innovation. So Eli Lilly, right? They have a new drug that's going to phase 3. That's going to show up in the chart. So anytime that you guys are trading, I want you guys to pay attention to the chart and go on a wider time frame so you can truly see, hey, should I be trading this asset to the upside or to the downside? Good job, everybody. Now, next one. Is this one going up or down? Let me know. Right, you see, like kind of towards the end, we got this nice little pullback here. But is it majority? Is it going up or down? And then should we be going long or should we be going short? Let me know in the chat. And then if you don't know, that's perfectly fine. Just say I don't know. My goal is to help you guys and serve you guys at the highest level always. Let me know in the chat. We going long? We going short? Exactly, long. Right. Now I want to give you guys some information. I want to tell you guys something. So this asset here, it dropped 35%. That's the perfect time for you to buy. And that's when you should be taking your trades and getting your calls to go to the upside. You don't want to buy anything when it's at a high. Statistically, it's not great to buy at a high. I'm going to give you guys a little secret. Anything in the market is mathematical. So every time, the farther the stock drops down, the higher your upside is going to be back to the all-time high and higher. So to make it simple, if you buy a shirt at $100 and I buy a shirt at $80, I won the transaction. It could be the exact same shirt, but I paid less money for it. So now I have more money over the long run to buy more shirts. You don't. Now that's a small example. And even though it's $20, it adds up over time. So when it comes to investing and it comes to trading and you're overpaying because you're buying things at a high, that's hurting you when it comes to the market. Now, let's look at this asset. This one's a little bit trickier. Let me know if it's up or down. And then let me know if we should be going long or should we be going short. And then if you don't know, that's perfectly fine. That's fine. Let me know. I want to help you guys. Right? But should we be going long? Should we be going short? Should we trading to the upside? We trading to the downside? What are we doing? Or you can do nothing. Right? That's perfectly fine. Either way. It's perfectly fine. Trust me. Trust me, I get it. I've been there. Long. Right? So I want you guys to pay attention when it comes to an asset like this. If you have a chart that looks like this. So technically, this is not a downward facing asset. Okay. This is why it's super important to know from the time frame that you are looking at the asset that you are trading or investing in. So let's just say this is over a span of 12 months, right? Or over a span of the year, this whole chart. So from January, we can see that we start off hot. We IPO'd, we moved higher. And then let's say March or April, we moved down, right? And the stock was kind of trading sideways and it's going sideways. But now you can see now where we are now, it's moving higher and going to the upside. So I want you guys to always go in the main direction of the trend, the main direction of the current trend. So first you need to look out on a long-term time horizon. So we can see this full chart, right? We can see that we are still not getting close to that all-time high. We got a ways to go, right? But the current trend, the current strength of the trend is going up. So I don't want you to short this asset. I want you to either do nothing or trade this asset to the upside because the majority in the current trend is going up. Let me know in the chat if that makes sense to you guys. If it doesn't, let me know. If that does not make sense in the chat, let me know. I want to serve you guys at the highest level and help you guys. Make sense? Good. Makes sense. Cool. Now, I want to get right into it. I promise you, you guys already know how to invest. You know what companies to invest in. But my goal is showing you this slide right here. Whenever you are investing in a company, you need to know all of their competitors. The competitor is not just going to be the same company within that sector, I promise you. So all of these companies are competing for the everyday person's time. This is mind and screen share. Mind and screen share. So you can only be on your phone so many hours in a day. You only have so much free time in a day. These companies know that and they understand that. So you have companies like Meta with Instagram and Facebook, and then you have a company like Disney that owns Disney Plus, Hulu, ESPN, and then you have TikTok, Snapchat, YouTube, which is Google, and then you have Netflix. So all of these companies are competing with each other on some level or scale. So Netflix, their other competitor will also be a company like Meta. Because if you're on Instagram or you're on TikTok scrolling on your phone, that's less time that you're spending on Netflix. If you're spending more time on Netflix and less time on Instagram and Facebook, that is taking market or mind and screen share away from that company. It's the same thing with all of these companies, right? I want you guys to start paying attention. I want you guys to start paying attention to yourself. Ask yourself, what do I do in my everyday life? And how are these companies profiting off of it? So, again, all of these companies are competing for the same thing, which is the everyday person's time. And even though they're all not in the same sector, right? They're all not in the same sector. They're all competing with each other on some level or some scale. Now, let's talk about profitability. So, how profitable are the media companies? So, it doesn't matter if you are competing if you are not making a lot of money. So, Netflix, annual revenue is around 33 billion and their profit is around 5 billion. So they have a 16% profit margin. So that means for every dollar or every $100 that Netflix makes, they're keeping 16 of it. Now you guys can see all these other companies, but I want you guys to pay attention to Disney. Disney is making $91 billion a year. Their profit is only 5 billion and their profit margin is only 5.4%, and 60% of that profits are actually coming from their land, their parks, physical assets, right? And I want you guys to understand something. So there's a reason, if you look on the right hand side, there's a reason why Netflix chart is going up and Disney's chart is going down. And this is why. If a company, so Disney, they're making 3 times as much as Netflix is making in annual revenue, and their profit margin is 3 times less. That's financial inefficiency. So if you're making 90 billion and I'm making 30 billion, there's no way that I should be outsmarting you or out efficiency you. There's no way that I should be able to move more money with my dollar and I'm making less money than you. That's a sign of financial inefficiency. And this is all going down on the lower scale. Does that make sense to everybody in the chat? Let me know. But this is a prime example of financial inefficiency. And then again, you always want to invest in a dominant company, and this is why. The dominant company is always going to be able to raise their prices. You see at Hulu, ESPN, a lot of them were losing their jobs. Over the last 2 years, a lot of people that worked at ESPN were losing their jobs. And this is why, because when a company, when they're not operating in efficiency and their KPIs aren't in order, which is key performance indicators, that turnover time is not great. This is what it gets you. And then this is what the chart is going to do if your company is not bringing profits towards you. Same situation with Intel. Next, I want you guys to make a vow to yourself to never ever invest in a company if the revenue is solely tied to its partnership with another company. Going back to investing in the dominant company, you always need to invest in the dominant company because they can win no matter what. No matter what happens, no matter what economic environment we are in, these companies are going to thrive, but they're only going to thrive if they're dominant and they have the money to thrive. So I want you guys to pay attention to the left side of the screen. So Nvidia, they unveil, some new positions. These companies, they invest just like us. So you can see when a company is solely tied to their partnership of another company, this is what happens to the performance of the stock. So you have Serve Robotics, SoundHound, right? Nanox, all of them dropped 30% or more. Or Serve Robotics dropped 30%. SoundHound dropped 30%. Nanox is still dropped around 10% almost, right? One company, your stock price should not be determined on another company investing in you or not. You should be so amazing that no matter if a company invests in you or not, you can live without them. Now, I understand you guys might say, well, if Nvidia is investing in them, well, shouldn't I hurry up? Shouldn't I invest in them as well? I understand you can get gains. I understand you can get gains if you catch it early and you invest in them at the right time. I'm not here to tell you that you can't make money off of it, but why not just invest in a dominant company that's actually causing all of this because they are going to be the winner? And then now with Weird, right, or WeRide and Nebus and ARM, now that Nvidia has invested in those companies, what do you think is going to happen when they move their money and they rotate their money out of those companies, just like they did Serve Robotics and SoundHound and Nanox? Those companies are going to fall just like those companies fell. So it's the same thing, same situation, same trap over and over and over again. And you guys can trade these companies. There's nothing wrong with you trading them. But investing in them long term, you need to go to Hefe, and Hefe is Nvidia. If Hefe is causing all of this ruckus, if Nvidia is causing all of this, that should show you how powerful they are as a company. Now, let's talk about credit card delinquencies because debt is a big issue that no one is talking about. When you go back and you study every recession, there's only a few reasons why a company or a nation falls or there are recessions. And debt is always a key driver of it. So I want you guys to pay attention to credit card debt. It's been increasing. Auto loan debt has been increasing. Student loan debt has been decreasing. You got loan forgiveness, right? So those numbers may be a little bit skewed. You got mortgage debt, other debt, hospital debt, right? All other types of debt. But I want to give you guys a few tools or a few things that you can do if you do have debt to decrease it. So here's some steps. First thing, I want you guys to make one extra mortgage payment per year. Shout out to MG, the mortgage guy. If you make one extra mortgage payment per year, you can knock down 7 years off of your mortgage on a 30-year mortgage. Just making one extra payment per year, you're going to knock that interest off a lot. Now, when it comes to student loans, trust me, I've seen it, right? I want you guys to make 4 extra student loan payments per year. So if you have a 10-year lifespan of your loans and you make 4 extra payments per year, you can knock the time down by 2 or 3 years just by doing that. And I need you guys to eliminate all other debt. Debt is the worst thing that you can have. I need you guys. This is why I tell you guys to look at yourself as a business because you are. Debt is overhead. So as everyday people, we already have to buy groceries. We have to put gas in our car. We have to pay for car insurance, right? We have other obligations that we have to tend to. You have to pay rent. Those are all expenses within your life. You need to look at it as a business. So debt is not doing anything but adding to those liabilities and adding to those expenses. And then we know, like, you have to pay interest on it and it just gets overwhelming time and time again. I want you guys to follow these steps and I need you to find a way to eliminate all other debt. And here's the key. You have to have a plan or it will not work. So what I have for you guys here is a plan. 1 extra mortgage payment per year, 4 extra student loans payment per year. You will be good. You will cut the time down a lot faster. But we have to stop being so emotional. We have to start thinking long term and stop thinking so short term because that's what's really killing us. We have to have a plan. If you do not follow the plan, it's never going to work. And you have to be consistent. If we're not consistent, you're just going to give up. And then when you give up, you're starting back from square one. So I want you guys to pay attention to this. And I want you guys to follow these steps if you are in this situation. Now, I want you guys to create a mantra that you will live by and be willing to die behind it. So life is bigger than us. Life is not really about us. It's what you can give to the world, right? But you have to follow something or believe in something so strongly or so much that it's going to pull something out of you that you didn't even know was inside you. So if you are religious and you believe in God, you have to follow God religiously. And you have to know whatever you are doing, whatever your path is meant for you. The hardships, the good times, the things that you do not understand. When I created APX or Apex, I created that because I want to be the apex of me. Apex stands for apex predator. I want to be the best. I want to pull out the best in everybody that I come in contact with. Anybody that hears my voice, I want to pull out the best version of them. That's what Apex stands for. And I'm willing to die behind that mantra. I will live behind this my whole entire life. So you need to create something and live behind it and be willing to die behind it. And that in itself is going to push you to where you need to be. So on those days that you're tired and you don't want to do anything, Apex. On those days where it's getting hard and you're frustrated, you're trying to figure something out and you're having a hard time, Apex. You have to have something in your mind that's always going to take away the doubt, take away the fear, take away the problems, take away the issues that you face on a day-to-day basis. You have to have something that you fall back on that's going to always push you to the next level and continue to pull out the highest version of you. I know it's hard. A lot of us were operating at lower level versions of ourselves. And I get it. Sometimes we may be a shell of ourselves, right? You can't be 100% every single day. But if you got 50, I need you to give 50. If you got 20, I need you to give 20. But it's always going to come back to the emotion. We are emotional by nature. So you need to have something that is going to emotionally get you to your highest self. And then let's say the emotion leaves. Logically, you have to put that logic and put those steps in place and say, hey, I know I'm not feeling the best right now, but Apex. I know I'm not feeling the best right now, but God got me. That's how I need you guys to think of it. So create a mantra that you are willing to live by and also be willing to die behind it. Now, I know you guys are probably going to ask me about Chinese stocks. I know, right? We want to be everywhere as investors. I know. But Chinese tech stocks, they've outperformed the NASDAQ 100 to start the year. And this is because all of the innovation that is coming out of China. So I told you guys, pay attention to the innovation that is coming out of China, and then you can be able to get an even bigger edge in the market. But I always want you to operate in your circle of competence. This is not from me. This is from Warren Buffett himself. But it will keep you disciplined, and it's going to strengthen what you're already good at. So if you were asking me, should you invest in Baidu or Alibaba or any other Chinese stock, I'm going to ask you, did you look at the profit margin? Did you look at the revenue? Did you look at the gross margin? Right? Got to make sure we're doing our research first. But is that in your circle of competence? Do you know how those companies operate? Do you know the government structure in China and how those companies have to operate? Remember, world politics or world conflict resolution, politics, economics, earnings, and innovation. No matter what country you are looking at, it's always going to be the same, no matter what. So unless you know the political structure and the government structure and the politics and the economics in China, I don't want you to invest in any company from that place, right? But you can't deny the returns. You can look at it here, right? We can see that communication services is up 11% to start the year, which is amazing. Technology is up 7%, and this is in China. The median there overall they're up 2.3%. They got a few other sectors that's up. You can see that energy is down, utilities is down, real estate is down. They definitely having a real estate problem in China for sure. Consumer defense is down, and then financial services is also down as well. So this is kind of giving you a snapshot of what is going on in China and what companies are actually benefiting. But I want you guys to stay focused. I need you guys to stay focused. The hardest thing in investing is to stay focused on your niche because you think that you can get so much and you can get all these returns out of all of these companies, which you can. But I promise you, you'll get a bigger return if you just focus on your few and stay in that circle of competence. There's 5,000 to 7,000 stocks on the market. It's a lot, but we can't invest in all of those companies. So we have to make sure that we have focus. And this is designed, when all of this news come out, it's always designed for you to put your money with the companies that are advertising to you. So as soon as you get that thought, like, oh, should I be investing in Chinese stocks? Like they're outperforming the NASDAQ, they're outperforming the market. Our market is going to be okay. I can tell you that our market is going to be okay. But then you say, hey, oh, well, I don't know. So let me go ahead and put my money with this company, this company, this company, this company. And then they're taking money from you. When you pay that management fee, when you pay that cash drag fee, right? When you pay that sell-off fee, all of those fees are getting passed off to you, and they're taking 3x of your money over a 40-year period. Now, so Russia and China versus the West. And this is the reason why I want you guys to just focus on the actual companies that are being dominant and the actual companies that are dominated in the United States. Because in Russia and China, like here in the West, America, we are focused on superconductors and semiconductors and quantum computing. But in Russia and China, they are developing more sophisticated error-resistant systems. In the future of quantum computing, it might be shifting eastward, but on a global scale, so this is going back to world conflict and resolution, the highest level possible. When I made that list, I wanted to make sure I captured everything, and world conflict resolution is at the top. If we are competing nationally and globally across the world, we cannot afford to let the American companies fall behind. So they have to go up. They have to. Then you have politics. So the government is going to make sure that all the companies that are competing, NVIDIA, Google, Microsoft, OpenAI when they go public, ARM, AVGO, TSM, they are going to make sure that those companies have, even trying to save Intel. They're trying to save Intel. IBM is at an all-time high. Haven't heard of IBM in a long time, right? But they are going to make sure that the American companies that are competing in this industry are going to push higher. They are going to clear the paveway for them. They're going to give them the funding that they need to be successful. And this is why I always tell you guys, always go back to world conflict resolution, politics, economics, earnings, and innovation is always going to fall under that. But again, if we are competing on a global level by law, by nature, they are going to pave the way for these companies to thrive and do better, which means the future growth of these companies are going to be amazing. And you're going to get amazing returns if you are investing in those companies now and you continue to invest in those companies. Now, here's a trading tip for you guys. Okay, if an asset looks like this, it's probably not coming back, right? I want you guys to put your money somewhere better. I want you guys to put your money somewhere better. So when you guys are thinking like, well, this stock is super, super low. Well, what if it just moves up $5 or what if it just moves up $10? Like I'll make a lot of money. I'm the first one to tell you, you can make money in any stock on a mathematical basis and perspective. You can make money on any asset that you invest in. It just depends on the price that you are investing in the asset and if it has any value to go up over any time period. You can definitely make money in any asset that you are invested in. But wouldn't it be smarter and wouldn't you have less stress if you just put your money in an asset that's actually doing amazing? So if the chart looks like this, asset is probably not doing amazing. The company is probably not doing amazing. The profit margin is probably not good. The revenue is probably not going. Innovation is probably poor. Otherwise, it would not look like this. Now you have certain cases where you have a Meta and you have a Netflix where the asset does drop, but guess what? It always goes back to the fundamentals. Profit margin stays strong, revenue straight stays strong, gross margin stays strong, operating margin stays strong, right? All of those things that we need to be paying attention to are there and were there even when those companies fail. But for a company like this, probably not there. And I didn't know you guys may be looking like, what if it has an amazing double top? If this asset was to ever get back to that high, it's probably going to push down again. So I want you guys to understand you have to put your money in the best place possible, no matter what you are looking at, no matter what economic environment we are in. Your job as an investor is to get the best return on your money over a 5, 10, 20, and 40-year period so you can save you and your family. And you don't have to depend on anybody else for retirement or for savings or for a family trip that you want. And we're not going to get it by investing in assets and poor assets like these. So just know if the asset does look like this, it's probably not coming back. Now, I want you guys to pay attention to this religiously. So trading and investing is all mathematical. I want you guys to start trying to put these things in mathematical perspective because it's going to help you understand what you need to do to be successful. So this example is if you are trading with $10,000 and you have a risk reward ratio of 1 to 5, meaning if you are willing to lose $100, you are trying to make 500. For every $100 that you are losing, you are trying to make 500. So let's say you started off with 10K, right? And you lost 20%. So you lost $20,000. It's fine. Now we're down to 8,000, right? And then you have to adjust. So you can't lose another 2,000 because that's not 20%. You're now at 8,000. You only can lose 20% of your capital. So let's say you lose another 20%, right? So you lost 1,600. So 1,600 is 20% of 8,000. Now we're down to $6,400. Now you're freaking out, right? Now you're like, what do I do? But some of us, we're taking a 50%, 70% loss. This is way better. Now you get your win, right? 100%. And we know like this is easy for an out the money option. This is not hard at all on the out the money option. Let's say you get 100%, right? So now you're instantly even after 2 losses, you're now $2,800 positive for the year. Let's say you were just starting off for the year. This was January. You lost twice, 20%, and then you had your 100% gain. This is all from a risk reward ratio of just 1 to 5. This is just following mathematics. But now we're at $12,800 and we made $6,400 because we made 100%. Now let's say we lost another 20%, right? Of 12,800, we lost $2,560. That's 20% of 12,800. Now we're down to 10,200, right? It's perfectly fine. I keep telling you guys, trading is a game of compounding. You're going to have setbacks. You're going to lose some of your capital just to make it back over and over and over again. You have to take the small losses. A big part of trading is just staying in the game. If you lose 30, 40, 50% multiple times, you're not going to last and stay in the game. If we have a recession, you're going to lose all of your capital if you keep trading with such a wide stop loss. You have to stay in the game and survive. But then after that, let's say we get another 100% win, right? We're at $20,000, $20,000, $20,400. You made 10.2K, and this is all from you trading with $10,000. That's it. This is just following mathematics, following the risk reward ratio. You lost 3 times and you only won twice. So your win ratio is 40%. You didn't even have to get you got a D, you got an F on the test and you still doubled your money. Like let's say you did this in 2 months. So if you keep following this process religiously over the course of a year, like let's say we did this let's say we just multiplied this by, let's say 4, right? If we did this 4 times over, you're now at 80,000 for the year when you're trading. I know you're trying to hurry up and get those gains, and you're trying to make such a big gain. A lot of that comes from us not having money in the beginning. So we try anything that we can to try to get that money back because we feel like we have to make up for all the years that we did not have money. When in reality, all you have to do is take it slow and steady. You're going to win. You are an amazing trader, but I need you to follow your rules and have a system. Let me know in the chat, does this make sense? If it doesn't, I promise I'll break it down even more. But let me know in the chat, does this make sense? And let me know, can you guys follow this plan and can you guys increase your wealth over time without having those big sporadic spurts of upticks and drawdowns in our account? And again, just like I said, let's say we turn $100,000, we turn $10,000 into $100,000, right? Are you going to have the discipline to not try to turn that $100,000 into a million and lose it all in the process? It's easy to make the money. That's the easy part. But they always tell you keeping it is the hardest part. Why? Because ego starts to get in the way. We're emotional by nature. This is why you always have to come in. You have to read books. You have to read mindfulness. You have to practice mindfulness. You have to say your affirmations. You have to be positive. You have to tell yourself, I am calm. I am patient. I am disciplined. I am consistent. I trust myself. I operate in abundance and I move with God. Those are my 8 affirmations that I have to say every single day. That keeps me grounded. So going back to what I told you guys, you have to create a mantra and you have to be willing to live and die behind it. So whenever you want to be emotional in your trades and whenever you want to make a bad decision, you have to say, does this truly align with my mantra and who I want to be? I got people watching me, I got friends, I got family, I have to be disciplined. I have to show them this is how you do it. All those characteristics that we don't talk about, that discipline, integrity, perseverance, all of those skills that we were taught as kids, that now that we're older, we don't really talk about as much. Those are the most important characteristics and factors in anything that you do. Hard work, perseverance, discipline, patience, adaptability, accountability. Up on this trade, I was wrong. Price action told me I was wrong. Up, I'm out. I want you guys to start being very, very quick when it comes to your losses and allow your wins to ride. A lot of us, it's on the inverse where we want to ride out the losses. No, you need to cut those very, very quick. And I like after you do it a few times, you get used to it, right? And this is why it's so important to know how much you are going to lose before you enter a position. If you're only going to lose $1,000 and that's comfortable with you, or let's say 200, right? You should be okay with that before you take the trade. You're going to be less emotional. You're going to say, oh, it's either going to hit my profit target, it's going to hit my stop loss, or that's the only two options. It's going to hit my take profit, it's going to hit my stop loss. I'm either going to have a big win or a small loss, no in between. And as you get more contracts, like you could take profit on the way up, take profit at 20% and then at 100%, right? So you can make sure that you're locking in profit, but it's either a big gain or a small loss, no in between. We don't have time. And as America is coming down and at a position where we are competing globally, we have to make sure that we as people are moving and operating with efficiency, just like these companies are trying to do at the highest level. Going back to treating yourself like a business. Next, I want to let you guys know anything that you want, you already have it. You literally just have to walk it down with time and work. So the yellow is where we are. So if you got $100,000 in your account and you want to turn that to a million or 5 million, like you're going to get there. But in between that is just time and the work that you put in to get to what you want. So we need to start writing down on a piece of paper or writing down on a whiteboard. This is where I am. This is what I want. How long is it going to take me to get here with the amount of work that I am willing to put in every single day? So if I want to have everything automated and have all these systems built out, what is it going to take you from getting where you are right now to what you want to accomplish? What is that time frame in between? And how much work are you willing to put in every single day to get that result, or every single week, or every single month? Are you willing to give 20 hours a week? Are you willing to give 5 hours a day, 7 hours a day to get what you want? This is the time frame. This is all it is. Anytime you want something, like you want to be successful at trading, you have to know it's going to take practice. It's going to take time. It's going to take work. But again, you always have to take accountability and look at yourself and ask yourself, how many hours per week or per day am I willing to get? Am I willing to put in to get this result that I actually want? That's all it is. So anything that you want is already yours. You just have to walk it down. It doesn't matter how old you are. It does not matter how old you are. It doesn't matter how young you are. It doesn't matter how old you are. It doesn't matter what you look like. At the end of the day, if you put that time in and you put that work in, nobody can stop you but you. It's only you. Now, let's get to this week. So this week, the market is closed tomorrow. So I want you guys to take that time to definitely, study, look over the market, get a little bit more prepared for sure. That's an easy time for you guys to catch up on reading whatever happened in the market, for you guys to do your research, look at your stocks, look at your portfolios, look at the charts. It's a great day for you guys to, just kind of take a break, take a breather, and then, get some extra studying in. But Tuesday, so Jerome Powell, oh wait, this is the wrong one. Give me 1 second. I got you guys. Wrong one. Give me 1 second. There we go. Okay, here we go. There we go. Here's the right one. Okay. So this week, let me know if you guys can still see my screen and everything is still good. From what I'm seeing, it's still good. I think we're good. Okay. Monday, it's President's Day, so the market is closed. Tuesday, we have Home Builder Confident Index. So, if you are holding a company like Caterpillar, this is definitely something that you want to look at. If you are holding your REITs or you are paying attention to the real estate market, maybe you guys are investing in real estate, Home Builder Confidence Index is something that you want to look at for sure. Wednesday, housing starts, building permits, again, on that industrial and home building sector. That even goes for companies who build like lights or have lighting with inside companies, or maybe they work on heating and cooling. That's all kind of connected. Thursday, we have initial jobless claims in the Fed manufacturing survey. So that's definitely going to move the market. Just kind of seeing how unemployment is looking. And it's definitely going to be something we need to pay attention to with all the layoffs that are happening within our government, for sure, and immigration as well. So Friday, we got U.S. services PMI, U.S. manufacturing PMI, consumer sentiment, existing home sales. So we got a little bit of data for us to look at this week for sure. Earnings, Monday, we don't have anything. Tuesday, you got Baidu, ANET, Oxy. Warren Buffett just added to his position in Oxy. On Wednesday, you got ADI, Analog Devices, Etsy, Fiverr, Wingstop, Carvana, Toast, Cheesecake. I didn't even know Cheesecake Factory had a stock, but the Cheesecake Factory reports earnings. Then Thursday, you got Walmart. Definitely pay attention. Alibaba, another Chinese stock. Mercado Libre, um, Square. Yep, Square. And then you got Coca-Cola. And then Friday, we don't have any earnings. And then this week, I am long NASDAQ. I'm long ES. I'm long the Dow. I am short the bond market, and I am long Bitcoin. So I'm pretty much long from technicals and what I'm seeing. I'm pretty much long on equities and short the bond market. I will let you guys know the back half of February is usually a downward trend. So we might pull back a little bit going into late, the second half of February, going into March, just on a statistical and seasonality standpoint. But some notes we got this week is going to be driven by the continued watch of politics in the White House, focusing on tariffs, even though it's getting annoying at this point, right? It seems like something new is happening every day. We got some economic data, and we have a few big names reporting for earnings as well. So, not kind of a lighter week, but we still got some things that we need to pay attention to for sure. Just kind of letting us know how the economy is doing, how real estate is doing, how that home building sector is doing. And then I'll definitely pay attention to Walmart, right? Pay attention to Carvana, because Carvana is going to tell you guys how the used car market is doing. So how all of these things that we can look at, like home builder confidence index, some stocks are gonna give you like an idea of what that sector is kind of doing, right? So like a company like ADP, they the economics companies, they use ADP's data to give out economics for us. So that's another company that you guys can look at to kind of get some insight when it comes to certain sectors of the market for sure. And like always, if you guys, I want to invite you guys to our community. This is our team, Apex. You can go to apex-partners.com/tech, and you can see everything that we have to offer in our team. You're gonna get um, 23 stock and crypto picks with 2 prices for you to enter on all of them. And I'm actually going to be adding a third one so you guys can get a quick entry on those as well. You guys are going to get access to my trading by Nova, specializes in long-term trends, of course, on fundamentals and technicals analysis. And then I actually just added options in there as well. So you guys have everything that you guys need to be successful when it comes to the market. And there's a bunch of other things for you guys as well. So you guys can scan the QR code and you can see everything that we have to offer. And then you can join the Apex team today. Now, I know you guys want to look at some charts. I will go over about, let's do 10 or so stocks. So let me know in the chat. Let me know in the chat what stocks that you guys want me to go over. And again, please, if it's at an all-time high, you guys know what I'm already gonna say. So, ANET now. So if I'm looking at ANET, they are so we dropped. How far did we drop? We dropped so far 20%. If I just had to guess, just from looking at this stock, like if I go to stockanalysis.com, ANET, the beta is 1.09, so it's a little bit more volatile than the traditional market, but not by much. A 20% pullback is not a bad area for you to buy at all. But they'll be good. They're probably just having a quick pullback now. But the trend is still obviously going up and going higher. So until that trend is broken, I would expect them to continue doing the same thing. ServiceNow, and looking at that for sure. Same thing with ServiceNow. I think I gave you guys a price target last week on ServiceNow, but like they're down 18%. Same thing with ServiceNow. Their beta, if I go to their beta is 0.99, so it's a little bit lower volatility than the rest of the market. So if they fall 25, like 20 to 30%, that's an area for you guys to buy that stock. What is a morning star versus even star formation with the candles? Okay. Or join APX to know everything that you need to know about technical analysis, what indicators you need to use, right? But a morning star is basically a morning star is a bullish candlestick pattern, and the even star is a bearish candlestick pattern. So they're the same thing, just on the inverse. I want you guys to kind of start looking at the market in a mathematical and scientific way. So they always say like as above, as below. So anything when it comes to the market, if there's something that you can look at, there's always an inverse of it. So I showed you guys like cup and handle. That's one of my favorite patterns. That's an actual chart pattern, not a candlestick pattern, but there's an inverse of it. So it's really that same thing. But a morning star is just a bullish candlestick pattern, and the evening star is just the inverse bearish candlestick pattern. Coin. Hmm. Um. Let me go out. Okay. Still haven't hit that high yet that they made in, what was that, 2020 when they IPO'd, when we went public. But this is an upper facing asset, right? So this is pushing higher, going higher for sure. We had this nice cup and handle action. I call this like I'm calling this a flashlight pattern. I I don't know what to call that. I've seen it, like I'm just now seeing this, but like it's definitely a pattern. So, but we still have not got back to this high that was in April of 2021, but it's an upper facing asset. Um, a simple option call would be if it pulled back to the trend line, buy it there, and then as it pushes higher, you can reap the benefits of that. Um, I'm not telling you guys to do that. I personally don't like Coinbase. Reason being, you can just get an exposure to crypto just by investing in the actual asset itself. So that's my only thing. Or a better a better one for you guys to invest in would be Robinhood. Robinhood is would be a way better investment to me than Coinbase. Um, I would have to like compare those companies, see whose margins are better. But just on a pure innovation standpoint, Robinhood is killing them. So going back to like world conflict resolution, politics, earnings, economics, and innovation, you got to do it the bottom up as well. And Robinhood is whooping them when it comes to innovation. So XLK. Let's do um so okay, XLK. So technology ETF is pushing higher, it's at an all-time high. So we got a lot of consolidation up here. So we either gonna break this level and push higher, or we are going to pull back since we are at a top. Lily and Novo. Lily's doing amazing. They pulling back because they just filled the gap. So they might have some more downside on like more short term downside pressure. Wait, wrong thing. Okay. Um, but yep, Willie, nice bounce at this 723 level. We came up, filled the gap, and now we're pushing back down. If they ever come back down to 723, you can buy them there. If they ever get down to maybe $600 and if like $650, kind of somewhere in that range, you can buy them there. But this is why we have to be okay with taking a loss, because if you're not okay with taking a loss, you're going to lose money in the process. So, famous investor, I think it was Peter Lynch. He said a lot of money is missed out from just kind of waiting on the sideline, and that's a prime example. So we got to have money invested. Novo, we still kind of at some lows here, but this is where you want to invest, right? So when I gave you guys the price target, we are somewhere around here. Um, and Novo, I'm telling you, Novo is gonna turn around at some point. If we look, so just to show you guys, right? If we go to, all of this goes back to fundamentals. So if we go to stockanalysis.com and we just look, this is in their currency. So this is not 290 billion. This is more like 30, I think it's 33 billion. Revenue growth, 4%, 10%, 25, 31, 25. Revenue has been growing over the last 4 years. Profit margin is 34%. Gross margin is 85%. Operating margin is 48%. So this is a prime example of buying a company that is amazing when it is distressed. And then you just wait for the market to turn around and reward it. But we can even look at the balance sheet. If we look at assets versus liabilities, they have very, very low debt. Or if we go to just ratios to make it a little bit easier, and we go to your debt to equity ratio is 0.72. It's under 1, which is amazing. Return on invested capital, like how much money are you putting back into your business that's actually that you're getting a return on it? It's 46% of their money, so they're doing amazing, and they're actually international. So can you explain what fill the gap after a gap up is? It's the gap at 833 on Lily. On Lily. So their gap was at like around 886 or so. So I think you said 890. Or no. Yeah, so like 890. So their gap fill was up here. And you can see, so Lily, we gapped it down. It's coming down. I keep telling you guys, a stock fills the gap 70% of the time. And then like if a stock gaps down and it's a great asset, I'm willing to say like 97. I don't want to say 100% because nothing's 100%, but 97% of the time the gap is probably going to get filled just because it's an amazing asset, great revenue, great profit margin, great innovation. But so a gap fill just means that the stock, you have buying and selling pressure overnight or after market hours. So, like when a company beats earnings and then the stock, it'll be up like 10% the next day and it'll gap higher. That's because you have all those selling and buying orders overnight. Institutions have been able to do it for a long time. We, as retail investors, have now been given the same opportunity in the same playing field as well. So, that's all that is. But the stock usually comes up, like the price of the asset usually comes back to where that gap is. So if you see on Lily, we gapped down here. And I can zoom in just a little bit. You see that we were here, gap down, moving lower, and then we came back up to fill this gap. So that's what that is. And then you have the same thing on Novo, right? So Novo, you got this gap here. And again, I keep saying you can hold this. You can hold Novo for 2 years. You'll get 100% return on it. You can take profit at 100%, and then it'll probably fall down another 35% 35% or so. Palantir is bigger, so she can get a good example. Yeah, why not? Why not? Um, so Palantir gapped up, and we got this gap to fill. Um, if we just use our measuring tool, that is a 30% drop. So and the stock has ran up like a lot. So a 30% pullback is not that much for a stock that's ran up this much over the time period that it has. But you can see here we had a gap here and we did not fill it, right? So it's a lot easier for a company to fill a gap if they gap down and fill that gap going up versus if they gap up and filling it coming back down. But again, like any asset that is created was meant to go up. So for sure. So Novo will be a gap fill to the upside. Exactly. Exactly. And then Novo, just in general, the market is punishing Novo because Eli Lilly is doing amazing, innovating, but Novo is the better company financially. I think Lilly is better for sure. They're in the top 10 stocks for a reason. But another thing is Novo is not an American company. If it was American, Novo would be in their top 20 easily. So that's another reason. But nonetheless, mathematically, and you have a higher return on Novo than Lilly. Going back to the upside, but Lilly is out of Indianapolis. Yeah, but yep. If you just do your research on Novo and see where they are innovating, I think they're moving in an amazing market that a lot of people are not talking about. And they would kind of like build another niche space to get more market share, but they're already in Africa and other countries as well. Lilly can definitely expand to other countries too, for sure. So they're 1A and 1B to me, but Lilly is just 1A because it's an American based company. That's their biggest edge over Novo, just being an American company. Um, what's a good price to start investing in Novo? I would say Novo is a pick in Apex. Like they'll get mad at me if I give you guys that price. I gave you guys a few, but it's a distressed asset. It's a distressed asset. So um, I've always said I want to buy things 35 to 50% off of the high. So but I think Novo. I think this was maybe a month ago, and I said Novo was a buy. I think it was at um around 83 or $82 or so. So if you have a drawdown of 7 or 8%, you can stop yourself out and re-enter if it go let's say it breaks here and it continues to go down. You would just want to wait until it comes back up to this level and then buy it there. So you're buying with some upward momentum, and then you can reap the benefits going to the upside. But mathematically on Novo, let's say you bought it here, you literally have a 89% upside. So you're gonna get 89% plus. So if you hold it for 2 years, you'll probably get 140% return on a long term investment. So this is why long term investing is so important. If you had $100,000, 140% of $100,000, that puts you in a different tax bracket. Or if you did it with 50,000 and you made 100%, or you made 150%, that's $75,000. That takes you from 50,000 to 125,000. So long-term investing is very, very important. That's why most of your capital should go there. 87. Cool. Cool. Um, what other any other stock that you guys got? Any other stock that you guys want me to go over? Really quickly, everybody in Apex, we have a call at 9 p.m. again tonight. And I will be going over some things with you guys to help us over the course of the next month. But what other stocks do we have that we want to go through, or that we want to go over? Microsoft. Love Microsoft. Microsoft. I like Microsoft. We kind of got this pennant. It's trying its best to stay like around this 408 level. I think, I keep saying it, I think Microsoft is going to have at some point, they are going to have an amazing year. They underperformed over the last year, but they're like if OpenAI goes public and they own 50% of it, and that deal between OpenAI and Microsoft doesn't expire until 2030, what do you think? How much value does that add to Microsoft as a company? So that's how I'm kind of looking at it. So I think Microsoft is definitely going to have a breakout year at some point, for sure. But like once you get to the top, like once you're in that top 10 or really top 5, you're in every 401k and everyone is looking at you to give a return. So like the goalpost is a lot farther for a company like Microsoft. ANET. I went over this already. ANET is pushing higher. I just bought Microsoft back in June of 2024. So you might be flat, but I definitely think Microsoft is going to push higher for sure. If you bought it in June, so you might be down or flat. At some point, I think Microsoft is going to have a 3-year run where they return probably 60% or so over the 3-year period on the light side. I was thinking about selling. Whoa. Okay. I know you want to sell it. Yeah, for sure. Keep it. I would just say, so, it's all about where you buy, right? That's the biggest factor. I want you to, when you make a mistake, I want you to hold it for a little bit and allow yourself to truly feel that mistake, right? Because we're emotional. So once you feel something, that is what's telling your brain to not do it again. So if you buy at a high, like hold it for a little bit and then you can sell it. Like don't sell Microsoft. It's too good of a company. You'll still your average is 412. Yeah, we're at 408. Like you're good. We're good. You're good. But we just got to be patient. That it's like Meta, right? Meta has been going up 20 days in a row, new record for any company. You got to be patient and wait for it to come down. Like just like it came down, and I'll be the first to tell you, Meta will probably never ever have this drop again, ever. I can tell you right now. Yeah, they'll probably never ever have that drop again. But for Meta to be a top 10 company and they IPO'd in what 20 it was 20 what was that 2013 2012, amazing. But you got to be patient and you got to wait. Yeah, that's the hardest thing, just being patient and waiting. Um, for sure. But you can get the price that you buy means everything. If you can get a stock, if it's at 100, if the high is at $100 and you can get it at 70, it's 30% off of the high, and your return back to the upside is 42%. So you just made 42% just from the stock going back to the all-time high. That's not even factoring in the push after when it continues to go higher over a 2-year period. Bought Meta at the same time and it's up 59%. Amazing. Great job. Great job for sure. For sure. Yep. Keep investing. It's just a learning process. You learn from the mistakes you learn from. I'm trust me, I'm still learning. Still tweaking or not tweaking, perfecting buy areas, buy zones. We had a good hit in stock in Apex though on one of those stocks for sure. But you just gotta, it's just constant repetition, constant learning. If you look at it over a 5-year span and a 10-year period. HMH, let's do it. SMH. Um, we are so we got this gap to fill, so they might come up and fill this gap, but I still think I might be wrong. I just don't think um a lot of the semiconductors are at highs. So for SMH to go higher, you're gonna need the smaller companies to play their part. Like you're gonna need Micron, Qualcomm, and all those other companies in that ETF to actually move higher to push it up. You can't just rely on Nvidia, because AMD is dragging it down. Like you need Nvidia, you need AMD to push higher, you need Qualcomm to push higher, you need if SMCI is in there, you need that company to push higher. So you're gonna need to broaden it out of the companies for SMH to truly like continue to push higher. You can't just run off of Nvidia, which is probably given because if Nvidia gave 23% of the return of the entire S&P 500 last year, imagine how much of it is actually pushing SMH. So you're gonna need a broadening out of that sector for it to continue to push higher, like everyone wants it to. But I think after definitely easily going into June and July, you'll see it push higher for sure. SMH, AMD, MU, NVIDIA. XLE. Yep, I do XLE, then I'll do one more. XLE is fine. The energy ETF. Um, if you just like, if you guys look at the charts of the stocks and you pay attention to them, they do the same things. They have a lot of repetition. So like, what's happening right now is historically, energy has done that. So um, the high is 97. We're at $90. So we're probably what with like 8% within the high. So we're 7% away from the high. Um, and energy is a slower mover, so it's not going to move as fast. So for sure. Um, I want you guys to know going into next week. So Elon Musk, he's about to drop his AI called Grok, and he says that it's smarter than all of any model that's on the market. So that's another model, another American model that we will see hit the market and hopefully help with competition when it comes to the global fighting between us and China. But I want you guys to know, like now, it's like an all-out war for what country can be the absolute best. Like all these countries are basically coming together and moving in the same direction. So all of our markets are going to move in tandem. Um, we're innovating to the same places, so it's not like how it used to be back in the day. All of these countries are trying to have the best stock market, the best innovation, the best trade agreements. So um, we shall see what happens when that drops, and then um, hopefully we can get a boost to the American economy from his AI chatbot. But until all his other companies go public, Tesla is the one for sure. But that's what I got for you guys so far. All right, that's what I have for you guys today. I appreciate all of you guys coming. As always, I appreciate you guys so much. Thought on this crypto cycle, or where are we in it? Amazing question. Great question. Um, I said it before. Bitcoin is gonna have a great year. Um, for sure, for sure. Um, if you just stay away from all of like, okay. So a lot of people people start asking me about cycles. Um, like cycles are important, but cycles don't really matter if you just buy at a good price. Like that takes all like just buying at a good price takes all the extra stuff out of it, and you don't really have to pay attention to it. So just focus on buying at a great price, and that'll help you. But we are in definitely the expansion phase for crypto for sure. You're definitely going to see the main cryptos rise. You might see a few here and there pop up, but they have to have they like. I want you guys like okay, just because you can make a lot of money in crypto does not mean that you should try to actually go do it because the drawdowns in crypto are bad. So if we can't survive 50% on an option call, you're not going to be able to survive 80% or 90% on a meme coin or a crypto that doesn't have value. But we're definitely in the expansion phase on crypto. I like Bitcoin. I like Ethereum. Those are the top two cryptos in the space. But I like Bitcoin over any other. Do you see a cycle changing now that institutions are involved? That's an amazing question. So you're gonna have to wait and see how much money each country actually puts into Bitcoin. That's going to be the key determinant of it. So um, I don't think the cycles will necessarily change. Drawdowns will probably be smaller because the once institutions are involved, it's not a free asset anymore. It's going to move based off of how they move it because they're moving the market. But you don't have a lot of institutions in crypto right now. You got Vanguard and BlackRock, but it's like when all of the other countries start pouring in a lot of money, and you also got to remember too, like if I'm looking at it, they're probably putting like maybe less than 1% of their entire capital into the crypto market. So they're just getting a little bit of exposure until they truly know like how they're going to benefit or use it. It has to have a use case. That's my problem with investing in other coins. Like just because I can make money off of them, I have to believe in the actual ability for it to go up over the long term. Bitcoin is naturally going to go up just because of supply and demand. That's it. So Bitcoin is technically all like Bitcoin technically it's impossible for Bitcoin to stay down for a long period of time, technically, if you're just looking at the structure of how it was built. But you have like all the other coins like Ethereum, Solana, Doge. If the owners of those coins are messing with the supply and demand, then that's like a CEO on the stock market issuing more shares. So if you add more shares to the market, that's devaluing your stock because the more of something that you have, the less valuable it is. That's why with Bitcoin, there's a supply. If you lose it, it's just gone. It's simple supply and demand. So there's a limited amount of it, scarcity. Eventually, so if you guys pay attention to cocoa prices, sugar prices, lumber prices, um, I think soybean, wheat, cotton, corn, egg prices, orange juice prices. So those are like some commodities where those prices are going higher. And then eventually like you get like some panic buying and then that pushes it higher. So you might have the same scenario when it comes to Bitcoin eventually. But um Bitcoin is gonna be a great investment for sure over the long term, focus long term. Yep. Great question. Amazing question. But I appreciate all you guys so much. I will see you guys next time. I will see you guys next Sunday, same exact time, 7 p.m. Central. I will be back with some more game, more information to give you guys help you guys be prepared for the week, help you guys understand what's going on in the market, and give you guys some tips that you can use when it comes to the market that you can implement immediately. Everybody at Apex, we have a call in 30 minutes, so I will see you guys very, very soon. But shout out to everybody who came. I appreciate you guys so much for supporting. But shout out to all of you guys, and I will see you guys for sure. Fires in the chat, fires in the chat, fires in the chat. I appreciate it. I appreciate it. But um, again, like always, I appreciate you guys so much. I want you guys to take this information and actually apply it immediately because knowledge without action means nothing. So you can have all this information, but if we don't actually go apply it, it doesn't mean anything. So I want you guys to take the lessons from each live and each video, past videos, and actually make sure we're applying it and we're not forgetting it, right? But that's what I have for you guys this week. Another great episode of Alpha Investing. I appreciate you guys so much. And then everybody at Apex, I will see you guys in a little bit.